I'm Irene Mutyaba Kabiri, the Corporate Banking Director for Absa Uganda. It's an honor to represent Absa Uganda on behalf of the Absa Group that is based out of South Africa, but we have representative offices here in Canary Wharf.
So Irene, please take it up from there and let's see how, especially around compliance, no, technology, no, and the new tech. The governor was here too, but...
All right, thank you very much. I think I'll speak technology closer to home, and that is the East African bloc. What has remained very topical in the East African space is mobile banking, and of course, a lot of transactions that are happening across different wallets. I think if we speak about the digital world, for in East Africa and even in Uganda, the emphasis really has been on the mobile banking space. And as financial institutions, I think that is really what we leverage on to make sure that we are tapping into the unbanked segment of the communities. Because when you talk about mobile banking, at least there is access to funds, and a large part of what we have done as financial institutions is try to get in to the last mile of the person down in the rural areas, which really encompasses a number of our clients that are not able then to access our services. So I think apart from that, when you come to AI, what we are doing as financial institutions is to make sure that we leverage on that in order to improve our credit scoring. So where we had documentation passing through the system, like for 2-3 months, people scrutinizing it. We are shifting to AI scored kind of assessments, credit assessments for our clients in order to make sure that it's seamless, number one, but it also is able to read the profiles and maintain the data for easy access to financial services. I think lastly is, of course, it is a digital world, and you would have seen we have a stand out there. We have been opening up accounts using our digital platforms, and it's real time. And then that is what the digital world does for us. It opens us up away from brick and mortar into the real world of making financial services accessible to people and very, very convenient. So I think that is how really we leverage on technology to make sure that we are delivering services to people in a seamless and in a convenient way, but most importantly for our markets is to reach that last mile of somebody or that is down there in the rural areas. Thank you.
The market for insurance in Uganda, how do you see it? Because when I'm looking at the numbers, they're telling me that less than 1% of our GDP is insured. And what are the banks not doing? And who can we marry with ourselves to make sure that we move that penetration higher up? Because last time I looked at the statistics, they were telling me that 1.7 trillion was last year, 1.57 trillion was what the market did. And if they're doing that under 1% of GDP, how much money are we leaving on the table? But also, how are we able to protect the investments that you're banking? I want to throw that first to Absa, then I'll come back to Dr. later. So I just want to throw that Absa. Insurance, what can we do? Where do we need investors to come in and support, or do we not need investors? Irene, maybe you can take that first.
Yeah, and thank you very much for that question. So I guess in the banking sector, it's because everything we do has to be collateralized and securitized in order, one, to protect shareholders' money, to protect investors' money. There is a limitation on what kind of collateral, on what kind of security that anybody can take. I mean, there is a level in which when someone cannot give you land and building anymore and they cannot do any other thing. So I think of recent, what we have tried to do is to blend the securitization of most of the facilities that we give out with insurance. And we have partnered with a number of insurance companies in the market and, of course, in the UK tapped into the insurance market here to say, if we have a good project, an infrastructure project that we'd like to finance, it cannot be looked at as the normal structures that call for security. We must tap into the insurance market. So we've done quite a number of structures tapping into the insurance market, at least for corporates. I think it is a new concept that we are trying to build on from a market perspective. Of course, we will do it for the A-rated and of government most of the time. But the general corporates, we still have some way to go regarding the insurance-backed kind of structures.
Thank you, Julius. Maybe just touch that a little bit. I still want to come back to you because I feel this. Julius, do you want to touch a little? I'm really looking at where we are, because if we scale our finance, we need to make sure that it's secure. Is there anything different that you think we're able to do, or how do we attract members from this audience to come and play in that space? And I'm going to come to the audience as well soon on that issue. I want Irene to touch a little bit, then I'll come back.
Okay, maybe I'll just quickly respond to the insurance question. We have, at Absa, we have partnered with a number of insurance companies that are interested in specific groups, especially women, vulnerable children, the refugees. What we normally do, we partner with them. They will, whatever funds that are available, we do onward lending to such kind of groups in order to bring them into the financial services. So yes, the partnerships are there. We have, most of the insurance companies, South Africa insurance companies. We have also now tapped into this market, the UK market, and then we also partner with microfinance companies. So what we do as a bank, we connect these 2 or 3 entities to be able to provide funds that can onward lend to the last mile of whichever group that we are targeting. I think the recent one we've just done is one that targets women down in the rural areas. And with that, I'm also glad to know that they are now also taking insurance, which were the real life insurance, as part of a package to these vulnerable groups and the last mile. So I think we can have a conversation, but the market is, at least the banking sector does have those services where we can, service the vulnerable groups.
I want you to just touch on trade finance. There was a question on trade finance and the cost in terms of insuring those trades. And maybe Graham can help us touch it.
My answer won't be so much about ensuring that trade. You need to find a good trade partner who's going to provide you that information, that instrument, in a particular way. And it's collateralizing and what's required for that, and the risk elements that go with it. I'm happy to talk with you afterwards to talk about our risk model, because again, we're talking about appropriate collateral for different markets. And that's not just saying, no, you can't do a trade, we'll make it 5 times the cost. It's actually doing it with a much more innovative way of providing the instrument to you at a reasonable price to do business. So happy to take that offline. The other thing really interesting is your comment about everybody says no, immediately you mention Africa, whatever. One thing I'm a great advocate of, and I hope you are as well, is that the rating systems which are currently used for banks and financial organisations are creating a real problem, not just for Uganda, but for every country in Africa. There is no African bank in the top 100 banks in the world. The first bank that appears is number 154, which is Standard Bank. 150. 154 is Absa. After that is way down. There are 850 banks in Africa. There are 42 central banks, 46 currencies. There are 2,000 languages spoken. So it's not surprising that there are issues with anybody wanting to invest is saying, where do I go? How do I do this? I was in Rwanda recently and we talked with the government there about a new Project 54, connecting the 54 countries of Africa's central banks. So we get standardization, reusability, harmonization of the way things work, movement of payments that much easier. And again, we've discussed that. I was in Namibia at the Commonwealth Heads of State meeting. and follow that at the Zambia meeting. And the same question comes up. Ratings. We're not rated by Moody, not rated by Fitch. What we need is a way to have a rating which truly reflects each country's aspect of its major banks in its own jurisdiction and economy, so that you can be viewed in a different way that not only makes sense to the whole of the continent, but to every other bank worldwide as well.
Okay, thank you so much for that. In terms of there is a comment here from another. Thank you.
Mine is not about trade financing, but something the lady from Absa said. I've been intrigued for some time about the low level of trade, intra-regional trade within the community. It's about 3%. It's stagnated at that level for a long time, but it's very, very high. Europe, etc. So she mentioned gold and platinum. So it occurred to me that the Africans are not buying the gold, they're not buying the platinum. So these products are for Europe or for the UK, that's why we sell more. So the things we are producing for ourselves are not selling much.
Within the region.
Within the region. That's why it's 16%. Okay. So I think we need to find a solution for that.
Okay.
I think we're over-targeting the other market and forgetting the regional market. Thank you.
Thank you so much for that comment.
Let's respond on that. First of all, you're aware that the UK, in terms of total exports to Africa, is 3%. The other way around, Africa to the UK, total is 3%. It hasn't really risen that much. It's
balanced at a very low level.
But it's balanced at a low level. So a 10% increase is going to be having a significant effect. So we need to find a way, the right products, the right services, and to rebuild confidence and trust with those organisations. That's something we hope to do with our footprint that we have in Africa as well. There's over 10,000 agents and partners in the 54 countries of Africa. So that's really important to understand how the business model can work for smaller SMEs who we've heard are driving those economies, driving employment, driving financial inclusion, and really helping to build economies and growth.
Great. You touched on rating, and the governor will make one, then the other governor will.
I have a small comment. I don't know. I comment that you excuse me if what I'm going to address has already been addressed. Now, my sister is here. She's our
She's the head of state
in charge of East African affairs. Now, I'm very glad that Honorable Rebecca Katada is here. In her presentation you had, when she was presenting here, that one of the problems that we have is, let me put it this way. I told you in the morning, let me begin like this. I told you in the morning that our economies, for example, the Ugandan economy is 100% liberalized. Our financial and capital accounts are 150% liberalized. Now, when it comes to trade, it is not the case. The key instruments of global economic governance are not liberalized the way our capital and financial accounts are liberalized. In the English language, let's say, talk in the English language. In the English language, is that when I'm doing business, especially with the UK, with US markets, European Union markets, the way you are doing business, for example, EU and Uganda, is not that you can say what you want. She told you. You need rules of origin, you need guarantees, you need all these key instruments of this economic. And so, for me, in terms of digitalizing this process, I don't know what we can do to ensure that the way we ourselves have liberalized these markets, you can bring your money, nobody's going to stop you. The assumption was that also we can trade, nobody's going to stop you. But people stop you. People stop you. Don't think that what you want to save, you can actually save it. You got Sainsbury. just go to the Tesco or these powerful supermarkets here. You cannot sell there anything that you actually want. And what is there in that supermarket is not that what we, for example, want to sell there in Uganda is of lesser quality than what you are having there. I can give example, for example, bananas. But because the rules of origin, as you were saying, guarantees and so on. So how do we harmonize this process? It's also very, very important. Then lastly, on the issue of, that was on the issue of banking areas. And they're telling you Bari branch and so on and so forth. For us, we are very to you now.
In front of the headmaster.
This Julius is in charge of Bari Bank, has been Post Bank, it's a government bank. We have got 22 commercial banks, and 3 of them are government and is managing one of them, the government banks. Others are private, 19 of them are private banks. Now, the problem also which we have solved for you and Absa is that supervision, bank supervision, and I want you to come and do business with us. This is very serious business. We have now developed parameters for SupTech. We want supervision to be digital. We have digitalized supervision. We want real-time data. These people, the way they give us data on supervision is that if I'm going to Absa and Power Bank, they are up to them. It is up to them to. I'm a supervisor of that commercial bank. Can you imagine? Can you imagine? It's up to them to give me the information.
But the more important is the logistics between yes, but at least we want to take it back.